I'm joined by Derek Halpenny, European Head of Foreign Exchange at the Bank of Tokyo-Mitsubishi UFJ. Thanks so much for coming in to speak to us. I want to start by asking you about comments from Japanese Prime Minister Naoto. Of course, he's been briefing reporters on the yen's rise. He said that the nation is ready to take bold action on the yen. How close are we to seeing some sort of intervention or action in the money markets?
Well, certainly there's a huge increase in the sense of urgency out of Tokyo today. To answer your question directly, I think when the Prime Minister speaks of the potential for bold or decisive action like we've had this morning, I think certainly the market should take that as a signal that we are clearly a step closer towards actual intervention in the FX markets. But what I would add to that is that it's my belief that there's still a deep reluctance amongst the authorities in Tokyo to enter into the foreign exchange market. So I think they'll try and exhaust other measures for now, and certainly the signal is that they will intervene, but I think they'll take other steps first before actual action.
And Kan spoke about unveiling an economic stimulus plan next Tuesday. What are your expectations of that?
Yeah, well, you know, we've been told by the government there's about 1 trillion yen left in the current budget, so they're looking at possibly extending the measures to boost consumption that were already in place. Yeah, certainly at the margin this could help, but, you know, I think it's going to disappoint the market. The other aspect of the plan that looks set to be announced is, I think, something from the Bank of Japan. But again, what can the Bank of Japan do at this juncture in terms of monetary policy? And I think, again, the markets are likely to be quite sceptical of the ability of the BOJ to do much.
So you're effectively saying that further easing of monetary policy in Japan will be ineffective?
In terms of changing the trends in the FX markets, absolutely. And the reality, the unfortunate reality for Tokyo and the authorities there is that it's very much dependent, the yen movements are very much dependent on developments abroad. And that could be shown this afternoon when we have the Bernanke speech at Jackson Hole.
Absolutely. What sort of reaction do you expect from the currency markets from that much-anticipated speech in Jackson Hole from Bernanke and Trichet as well?
Sure. Well, you know, the markets, the way yields have gone over the last couple of weeks, I think it's very clear that the markets are now very much positioned for the potential for QE2 at some point towards the coming FOMC meetings.
In the US?
In the US. That, I think, is becoming a greater reality for sure. And if we get clear signals from Bernanke this afternoon, then you could see dollar-yen reverse these move higher that we've had this morning.
So further stimulus measures from the Fed could put downward pressure on the dollar?
Further monetary measures, absolutely. In particular, dollar-yen. I'm not so sure it would have such a broader impact on the dollar. If you compare QE1 in March 2009, where we had a monumental sell-off in the dollar up to 150 against the euro, we're going to get nothing like that. And I think generally the dollar will remain supportive if equity markets continue to move to the downside.
And what would that mean for Europe?
Well, I think euro-dollar would certainly move lower, and privately, I'm sure the European authorities would be quite comfortable with that. What's interesting, going back to the intervention element on euro-yen versus dollar-yen, the results from the corporate survey, which was presented to the cabinet today, showed that Japanese corporations are better positioned for a move lower in dollar-yen than they are in euro-yen. And that raises the potential that if the Japanese authorities did intervene at some point in the future, that the balance between dollar-yen and euro-yen could be more in favour of euro-yen, given the potential risks for the corporate sector.
And very briefly, Derek, all this comes at a time when Japan's Prime Minister Naoto is facing a leadership challenge, a threat to his premiership from one of the most powerful politicians within his own party. How does this impact his ability to tackle economic monetary difficulties?
It definitely impacts. You know, it's very clear that what the government are trying to do at the moment is come up with some form of agreement to work together with the Bank of Japan. But Governor Shirakawa could be thinking privately to himself that the Prime Minister could be different in 2 weeks' time if Ozawa was elected. So there is that element of uncertainty that is clearly unhelpful at the moment. And of course, what could ultimately result from all this is that the LDP are left in the strongest position if the DPJ splits.
Well, thank you so much, Derek Halpenny, European Head of Foreign Exchange at the Bank of Tokyo-Mitsubishi. Good